Hello, everyone. It's JJ from Microwave Futures. Hope you are all enjoying the weekend and going to do a little bit of a what should we look for in the month ahead, and along with our weekend update. And very excited. I'm putting out a new product in our trading room where I will be going through scenarios based on actual real business practices to prepare for the next day's trading. And Also, we'll be doing some work this week on how to analyze order flow the way the pros do it, because there is so much misinformation about order flow and just stuff that's wrong out there. So we're going to do that this week in our room at Microwave Futures. Um, Come check us out. We've got a 7-day free trial where you'll learn how to trade the way people are taught to trade in the industry, not some flighty, system based on, you know, hopes and dreams. So let's get to work here, dig down into the market, and see what March will bring. So I'm looking at a daily candle chart, and on that chart we've got the 200 SMA. Now I'm not a candle guy. I wasn't really a candle guy until I learned how beautiful candle charts are. Because not only for technical analysis, but they tell you where the inventory is. Look at that. Look at 59.56. There's a big rotation. You see that, folks? You're just rotating inventory, right? Back and forth between 56 and whatever this level is here, 74. So it's very interesting because markets are about moving inventory. Charts show the rotation of inventory. So this is what you need to know if you want to be trading in the right direction, right? So if inventory is above you, which means that creates resistance. So why would you be going long into resistance, right? That's where you want to be shorting. So speaking of shorting, right, we had a month end short covering rally at the end of the day. I probably had some buying, real buying in there because we had the 200 SMA, right? We have a lot of people who come in, a lot of people work that moving average or work off of it, I should say. So we're right back into this cost basis here at 56. Inventory is still above us. The biggest thing about a month-end short covering rally is you always have to question whether that buying will be there after the markup. You see, we mark up assets at the end of the month, but is that buying, does it have follow through, right? And as you can see, we're hitting an area where there is overhanging supply. Okay, so that's one thing to watch for. Now let's go take a look at the old market profile chart. And we show here our larger balance level. And gee, look, it almost kind of lines up, doesn't it? 59.50 to 61.15. Um, and we have been rotating in and out of that balance since not January, November. November. This is a larger time frame balance. This is a larger time frame rotation of inventory. So now we're back up over 59.50. We closed 58. Do we hold? That's what we're going to have to see. Or do we dip back into this really ugly brown color from the blue? This is supposed to be 2 times discount. This is 2 times markup, right? This is where you acquire your inventory. This is where you go sell it for 2 times profit. This is where you got to put it on sale. So we had a good sale, right? Going into the end of the month. Just think about it, folks. End of the month, everything must go. We will not be undersold. And that's exactly what happened. Also, when you took out this low a couple of days ago, that was a swing low for a lot of those swing longs, and that's a lot of pain to endure. So they're going to bail before the end of the month. We'll try again next month, right? These are a lot of large players, and some of them will cut and run, because remember, people trade on borrowed money in this market, right? So to hold some of these positions, you just be like, if I'm long 15 and it breaks 65, 66, I'm out. I'm out. I'm gone, right? The larger players, not retail. So that's one thing to look at there. Now let's go take a look at a smaller balance zone. Now, this balance zone is just from the beginning of the year. Okay. So that shows the rotation of inventory since the beginning of the year. We went into this under 22. The target was 50.35, and we didn't quite get there. So we rotated back up. We're still in this zone. So as you can see, the overhanging inventory above 60.22 is still there. And we closed right into this area where there's a chunk of volume, right? So there's going to be some inventory in there that we're going to have to clean up, which goes into Sunday trading. Okay. There's the close at 58. Let's go take a look at Sunday. Now, these market profile charts are a little freaky for folks who've never seen them before. Honestly, it took me quite a while to learn how to use them. And then it took me even a longer time to learn how to use them in a practical way instead of all this esoteric talk. And for me, I had to then take that and figure out a way how to teach people. So here we go, right? So, you don't have to be a statistician and talk about Gaussian distribution to understand what I'm talking about. So here is Friday's profile, and we had a massive short squeeze. When that last half hour, the last hour, we call it L and M period, right? When L period took out the day's high at the 14s, it created it just created some buying which pushed the market up. Then we came back down and we opened M period, flushed it down a little bit, stopped right at the overnight high. That's where the shorts are trapped. So when the shorts came in and bid, whammo, they pushed price all the way up. And when we took the L high, this is what Dalton and Stottlemyre called the base of the price spike or price probe. It occurs in the last half hour of the day. And look at the buying in that occurred. That's all buy-ins, right? That's all buy-ins, right? The real longs would have been long in down here, That's where they were putting size together and selling it. Massive ranges once again, and then the market closes. I use the 5 p.m. close because I want to know where they stashed the cookies after the market closes. Everybody else will use that close at 59.64. I want to see how it closed. So after the market backfilled, okay? Which means it went back and filled in the supply. So that close is lower than that close. That tells me that there was a little bit of selling, right? A little profit taking. Who wouldn't? I mean, good grief. So what I'm going to do Sunday night is we're going to use these lower stops and we're going to see. Now, you never know what's going to happen. I'm going to give you an upside scenario just so we always have to be, prepared. In case this thing opens, and takes out the high of N period, right? At 66, it'll gun for the previous day high at 71. Now, by some freak accident, if it takes out Friday's high, right? The upper stops are going to be the I high from on the 27th up here at 76. Now, what am I talking about the upper stops? It's at the top of every half hour candle where if you blow out that level, it will create buying by triggering stops from short sellers. So the stops from short sellers trigger, in this case, a buy order. So there's a flurry of buying at the stop. This is where size traders will also, if they have product to sell, will sell into it. So that's why if I was long from 66, I'd be looking to get out before the high because I know that there's going to be competing sellers here. Okay. So anyway, that's the upside. Those are your upside targets. Sorry, this video is a bit long. And downside targets, I want you guys to be prepared, right? Downside targets 56. And if we take that N low, then you've got this huge area from 59.53 half all the way down to the base of that price probe or spike at 21. So that's very hard to trade that using market profile, right? It's just there's nothing there. There's no place to put your trade, no place to put your stop, right? But that just gives us information about an area of the city. Now let's go into the neighborhood And this is where the 1 minute candle chart is the most beautiful thing in the world. You see, what I do is I look at the balance at the end of the day, that distribution. You can see our point of control moved up to 59.62, right? That's where all the juice is. That's where all the volume is. That's where they bought all those poor suckers in. Sorry, I shouldn't be laughing, right? But hey, I've been bought in. Hey, who hasn't, right? So that is my balance from 59.56 quarter to 62 half. So, and it corresponds with the volume profile. So it shows you where the distribution is. Now I'm just going to get rid of this for a second. So how are you going to trade this off the open, right? Or into the first little bit of the night this is your 2 times profit zone. This is your 2 times discount zone, right? So, hey, it's not selling at the store. This is TK Maxx. Up here is Saks Fifth Avenue. All right. Think about it that way. So this is where the inventory is. So there's that 56 area, 56 quarter, right? What you'd like to see is these will be your targets, right? And of course, if we break 75 or we break 43, just double it again. It's simple, right? Balance, balance times 2, times 4, times 8, et cetera, right? So what you want to do is I would be looking at the bottom of this candle right here at 50, right? Now, it doesn't show you that in the profile chart, right? It's useless there. But I would say, right, that, and then look at the top of these candles here at 36. I mean, sorry, 38, right? If you look at that, you'll see where's the base of the spike is 21. So we still have no reference on profile, but candles are showing us, right? That these are areas where I would look for support, not support to go long off of, but enough buying there that if I was short, I'd be covering in these areas, right? Because you might not want to buy it because you don't know if it's going to hold. But if you're short, it's a great place to pay yourself, right? Because there's going to be competitive buying there at these places. So it's going to be a very interesting evening. I'll post some more stuff. And what I want to talk about now, real quick, is in the room from now on, we are going to do a short video that prepares us for Sunday night's opening, which is exclusive to the Micro E Futures room. The scenarios and how to trade it. And how to trade it, it's great to look at levels, but what trades do you look for? Where do you put your stop? How do you determine why you're looking at those trades? What is the business reason that is behind the trades that you are scouting out, right? The scenarios that you're looking at. Remember, we're retail traders, so we only do business when the business suits the way we do business, which is our setup, right? That's doing business on our own terms, right? It's the only thing you can control, right? That and your risk. So we're going to have, we'll have another video today in the futures room, and it's the scenarios, how to trade them. They're based on real world business practices. So also, how do you know if the trade's not working? We have built in risk into the trade setup. So you get taken out of the trade if it's not working, so you save your money, right? There's a business reason why trades work. And when that business reason goes away, you have to go away and take your money and run. Okay. And the other thing that we're going to be doing going on is we are going to be teaching people to trade order flow the real way, right? Instead of all this nonsense that you see about order flow trading. And a lot of it is a scam because they're trying to sell you expensive software. And, God bless, I respect the hustle. But we are going to teach you how to trade order flow like you were actually working on a trade desk in the old days. And if I gave you a pencil and paper, could you trade? And this is how the pros used to do it. And it's simple and it doesn't cost anything. And it's based on common sense and business logic and business practices that have been going on for thousands of years. So come give us a visit at microefutures.com. I apologize for the video being a little long. Hope you guys and ladies have a wonderful weekend. Take care, and we will see you tomorrow. I'm JJ. Bye for now.